With that, let's also welcome a very special guest, Mr. Andrew Holland, CEO at Avendus Capital. The last time we were chatting, Andrew, I mean, just a couple of weeks back on the sidelines of what India thinks today summit. By the way, on a side note, if you have not watched that interview, do check it out because Mr. Holland over here spoke about what makes him better in India, our position among global equities, the trends and sectors to watch out for in 2023. It is available on YouTube, so do watch it. But in the same interview, sir, you also predicted that the Indian bonds will be included in the Bloomberg emerging market bond indices, and that finally has happened. FTSE now remains the last bastion for India to conquer. When do you foresee them coming on board?
It's always difficult to get the timing on this correctly, but before I just comment on that, thank you again for the opportunity, and it was great seeing you at your summit, which was a fantastic event. So, I think the FTSE will follow suit. I mean, with the other bond indices, JP Morgan being there now, Bloomberg. So it's just a matter of time before the FTSE includes it in the bonds. The good news about this, obviously, is that we'll see some strong inflows, and that would lower yields. So the question still begs: can the RBI go ahead of the Fed in reducing interest rates, which would ease some of the problems for the banking system going ahead as well? So that's I think the next focus of attention for me is what the RBI will do.
All right, and I mean, certainly it's a big positive. It's a big positive for the rupee. Of course, as you pointed out, it will bring down the cost of credit. But do you think that this inclusion and JP Morgan is also the inclusion is also going to happen starting June of this year? Will that open our finances to greater scrutiny, and therefore, I mean, the general elections becomes, I think, more important in the larger scheme of things, because the Modi government, I mean, they have been focusing on fiscal consolidation, and our fiscal deficit overall, sir, in fact, it's on the higher side compared to, most of the other index constituents.
Well, I mean, it's not high compared to some of the other deficits I see around the world, to be fair. I mean, particularly the US and Japan and the UK. So I don't think that's what investors will look at. I think they'll look at one, first of all, yes, you're right, stability of the government, and, we'll have to wait and see. But, that's what the market's banking on at the moment. And secondly, I think they'll look for the growth of the economy. Where is India in the kind of longer term? What's the outlook for interest rates in India and inflation? And all of those are, are kind of more positive. So, I don't think, I think what we'll see is probably, some a little bit of front running in terms of buying the bonds ahead of it being included in the index, and then a steadily kind of increase in bond weightage, which you have to have, right? I mean, you have to have it. So it's whether you're overweight so let's just say your weightage is 2%. It's whether you're overweight more than 2% or you're underweight, and that depends on your outlook for the currency and interest rates and the economy.
Good morning, Mr. Holland. Drive your attention towards China, which has embarked on an ambitious target of 5% growth over the next 1 year, and they have made big announcements, a plan for an ultra-long special central government bonds, a pump prime sort of a boost to grapple with deflation, which their economy is grappling with, reeling under for some time. Getting consumers to spend on commodities. Now, how do you see this playing out, and do you see the commodities market going up because of this impetus? Metals especially, whether it is China, and do you see this rubbing off globally on the metals markets everywhere else because of this pump priming?
Yeah, I think that the market's still at odds with what the Chinese government's doing. Whilst they've said the 5% growth, GDP growth going ahead, I still think we're all awaiting for that kind of big bazooka to be fired. Towards particularly kind of stabilizing the property market, and in fact getting investors' confidence back there. Not just investors, but consumers as well. Because once that happens, then I think you'll see a big uplift in the kind of outlook for China, and that would push metal prices, which you mentioned, a lot higher than where we are today. So I think that the market's kind of not convinced of the 5% without some kind of boost to the policies or boost to the economy. And if that comes, which I think is likely, then I think you'll see that metal prices rising very quickly. But some of the good news is that deflation in China means that you're exporting deflation as well, so that keeps margins better for a lot of companies globally, but also inflation a lot lower. So on one side it's good that they got deflation, but they need to boost the economy to get it moving ahead. But that would be, I think, as soon as you see that, you'll see metal prices rise very quickly.
Going by the sentiments, at least the Hang Seng has reacted positively to the news today. But there is another sector in India which looks to be very good for foreign investors right now. Saab, the Swedish manufacturer, has announced that it is opening its first 100% Indian manufacturing facility in the defense sector in Haryana. Now, do you see this trend continuing? The defense sector in India has seen an uphill growth over the last few years, and the government is doing everything to boost it, HAL being an example. So do you see more foreign players coming into India, setting up 100% manufacturing facilities to qualify even for the Make in India procurements of the defense forces? Do you see this trend to go on, and do you see them getting listed also in the Indian stock markets?
Yeah, no, it's a great point, and one of the points I made in the summit was that if you look at the companies, the global companies that have come into India and have a listing, they've done spectacularly well. Hyundai said they might, which have been here for years, right? They might kind of list on the market. Now, if they did, and the valuations I've seen are around 30 billion. That's kind of 40 to 50% of their own market cap in Korea. BAT Industries said they're going to raise some money or monetize their stake, and the share price in the UK went up 11% on the day. So, it's not just that you're benefiting from the growth of the Indian economy, but if you do a listing, then you're getting valuations which are sometimes as good, if not more, than you have in your own home country. Maruti being a great example. The market cap here of what they own is bigger than their own market cap in Japan. So I think that's the kind of benefit you can get, not just from the kind of sales and profitability that you're going to derive from Indian kind of revenues, but also if you list, then you're going to get a valuation kind of impacts as well, a positive impact, which will help your own share price in your own country.
All right, and the fact that some of these companies could get premium valuation speaks on the inherent strength of our markets. And I mean, 2024 we have had a great start to the year. In the first couple of months, we have seen about a 3 to 4% dip along the way, but the recovery that has been almost immediate now. We are currently about 3% away from that 23,000 milestone, Andrew. How soon do we get there? End of the financial year, do you reckon?
Yeah, we might have a kind of a run up in the next one to 2 months, ahead of the elections, but I think that's about it. And I think then we'll await to see what the new government has in store going forward. I think there's obviously there'll be another budget to come in July. And I think all eyes will be on that, particularly on the tax side, to see if there's any changes, particularly for the markets, which has been rumoured for some time. And I do expect something to happen on that going forward. So I think the market will probably, feel the upward trends ahead of the elections, but thereafter, it really depends on government policies and taxation, which I think will drive the market in the shorter term.
All right, and before we let you go, sir, the broader markets, now the cracks are starting to appear over there, especially the small cap index. It's, at its lowest level since in a month. In fact, it's at a February low, down about 2% this morning. What's your take on the broader markets and small caps specifically? Just some good old profit booking taking place, or you think that the valuations are so high that the market is finally taking cognizance of it?
Listen, it's been a great run, right? And you're bound to have some correction. I mean, it can't be a straight line up all the time. I would say that, whichever, if you're dealing in mutual funds or you've got individual stocks, if you still believe in those companies and you feel that the kind of runways there for many, many years, say in the electronic manufacturing sector or the hotel industry, where you can see that there's big growth potential, then these are corrections which, are bound to happen, but would be a good time to kind of add to your holdings going forward. So you're going to have mid caps outperforming, then small caps, and then large caps. It's a rotation that you'll find in many markets around the world. If you look at the US, it's a magnificent seven, right? It's not as though small caps have really performed that massively well, but there'll be a broadening out of that as the economy recovers going ahead and as interest rates come down. So I think if you believe that interest rates in India are going to come down, that's going to benefit those small and mid-cap companies as well.